more than just business news, we're news for business people.
Good afternoon and welcome. You're watching Bloomberg Quint Live. It's a rough day for the Indian markets. The Indian markets have now fallen for the sixth straight session. The fall today is the steepest since November 2016. India VIX continues to surge. The global market sell-off intensifies. US markets post the sharpest drop in 6 years, writing off all gains made in 2018. And the major Asian markets are trading with cuts of 5% and more. Tata Motors is the top nifty loser after it misses third quarter profit by a wide margin due to lower Jaguar Land Rover sales in the US and European markets. And Hero MotoCorp and Lupin are the two nifty companies coming out with their third quarter earnings today. And now it's over to Darshan Mehta for Hot Money. Darshan?
Thank you, Alex. Hello and welcome to Hot Money on Bloomberg Quint Live, India's first digital live streaming business news service. This is a show which gets you a complete wrap of all the stocks that are buzzing in trade. I'm Darshan Mehta. Let's welcome our experts then. Umesh Mehta of Samco Securities and Vinit Bolinjkar of Ventura Securities join us on the show. Let's start today on Hot Money we'll discuss stocks like Tata Motors, Bosch, Ujjivan, and we'll ask them for an investment idea post the big correction that's happened today. The first stock that we're talking about is Tata Motors. Quarter after quarter, Tata Motors keeps on disappointing as far as its numbers are concerned. The counter is trading down 6% after a weak operational performance. Even their mainstay Jaguar Land Rover came out with margins which were much below what the street was anticipating. So we'll ask our guest what they feel should be done with Tata Motors. Umesh, Tata Motors keeps on disappointing with numbers quarter after quarter. One of the cheapest stocks on the Nifty. So what went wrong again, and do you think that this series of underperformance will stop at one point of time?
So cheapest stock in Nifty, I think, let's see that. So Tata Motors predominantly is an international player, wherein they are selling luxury cars. So in fact, the cheapest stock is maybe Ford and General Motors. They are in single digit P. So Tata Motors maybe currently is trading at around 14 times earnings. But given the growth and single digit growth, Tata Motors does not command that much premium, that much earnings multiple. So yeah, there is a slight betterment of their domestic business, but that is only 20%. Right, the 80% is international business, and if international business there is no growth or nominal growth, single digit growth, there is no reason why Tata Motors should have double digit PE multiple. In fact, single digit. Why? Because it's a global player, and when FIIs want to invest, they will look at entire things. So from their perspective, Tata Motors is still at costly valuation because they have better options to play General Motors, Ford and the likes if they want to go into this sphere. So what's really changing slightly, but in terms of entire aggregate value, it's very small. Tata Motors really domestically is doing good in electric vehicle. I think so. They have they have test marketed and they are selling. The cars are on the road. They have got decent booking. But then that's too small. So eventually, if value has to be unlocked to Tata Motors, they will have to demerge the domestic operations and international and the foreign component. Then I think there is value to be. Otherwise, I think at this valuation, although yes, margin of safety is there, but the growth will not come, right? So unless it comes down to single digit valuation, then only it makes sense for investors to enter Tata Motors.
But what's plaguing Tata Motors? Because the Tata Group, they managed to turn around other group companies like Tata Steel or Tata Global or TCS always has been doing well. But this is one company in their group that somehow they have not been able to turn it around. So, but what's the key problem in Tata Motors as per you?
Correct. So as Warren Buffett says, it is better to avoid automobile company, and this ideally is they have international presence across the world. So major market, that is developed market. So there they are not. So yes, they had their 3 years, 4 years of growth, but now it is very difficult for them to get really penetration, get the numbers, because those are large markets and they have got different brands, different options. So why Jaguar for them? For all those overseas buyers. So yes, to that extent. So ultimately, what's the big attraction, right? So if you are in US, why will you buy Jaguar or Land Rover? You have got better options. So to that extent, yes, growth numbers are muted. Single-digit growth does not warrant that this high valuation.
Okay, so that's the view that's coming in. It's a slightly bearish view that Umesh has put across. Vinit, do you believe with this, or are you bullish on Tata Motors?
Well, I'm at this price. I'm bullish. Okay. We have to understand the fundamental difference among the global portfolio. Of course, the Indian brand is not the growth driver in the overall scheme of things. The number of units that JLR sells is in 100,000s, whereas the other guys sell in millions. You know, so there's substantial ramp up, and JLR is a very top of the mind brand recall. So there will be a little bit of slowdown in adjustment of inventories and pickups. But I think China will pick up again. I think 14-15% growth will come in China. And there are two runoffs of two models. So that was the reason why there was a slight slowdown. But I think the pickup will come. Their models have been refreshed, and the JLR growth story should pan out. In India, the CV cycle is booming well. They've got their act together in the PV segment. So I think there is a case for a re-rating to happen. Okay, and I think we will see a good CAGR growth over the next 3 years. So I think at this price, as he said, there is value in the stock. It definitely warrants a relook.
Okay, but what seems to be the main bone of contention of such underperformance results over the past few quarters? So and by when do you see this turnaround actually happening?
You know what, you have to factor in the higher tax rate, amortization, and the margins are very wobbly. So once the margin traction comes through, and the street has factored in these lower value, the higher expenses below the EBITDA level, I think it will take it into stride and it will start moving up.
Okay, so that's the view that's coming in on Tata Motors. So Umesh has a slightly negative view. He believes that a multiple of close to 14 times is something that is unwarranted. He believes a potential single-digit multiple could come in. But we have a contrarian view that's coming in from Vinit on Tata Motors at this point of time. He says valuation at this point of time are attractive, and with the new launches, probably a pickup should happen on Tata Motors. So time will only tell what actually happens with Tata Motors. The next stock is another stock which over the past few quarters has been underperforming in terms of their results, but this quarter results were fairly decent in contrast of what they've done over the past few quarters. The stock that we're talking about is Bosch. It's down almost 2.5% in line with what the markets is doing. But Vinit, what did you make of the numbers, and what's the outlook for Bosch going ahead?
I think it's a very lackluster story. Not too much. They're going to display some of the EV models in the auto show. But apart from that, I don't see much kind of appreciation or any kind of great play out here. For me, it's an avoid stock.
Okay, but what seems to be the concern that it's been a marked outperformer if you see over this thing? What are the potential triggers and what are the possible concerns that you have on Bosch?
For me, the valuation is one concern. It's 27 times FY20. There's a large drag of EV on its business. So for me, it's a no-go stock. Okay,
so it's a clear avoid that Vinit has been speaking about. But Umesh, what about you? Do you like Bosch?
Government permitting 100% FDI for retail, and Bosch's intention to come in and display the range of products. So right, currently in India they have the automobile bouquet, but once they have this, once they come out on retail, I think the global lineup that they have in terms of engineering products, household products that they have, so I think that's a huge story. And given the pedigree of multinational management, and valuations are slightly higher, but they have also corrected in last 1.5 years. So given the valuation, but given the potential that the Bosch has in terms of higher penetration, acquiring retail market, I think, and the brand that Bosch enjoys, so they are into encashing, premiumizing their global portfolio into India. So I think that's a bigger story one needs to look into, and that's how investors really have to be patient and hold on to the stock. Some story like Honeywell automation will play out in Bosch in next 3 to 5 years. That's the kind of potential we see in Bosch.
Isn't it already part in the consumer durable, or is it part of the unlisted entity?
No. So currently it's not.
Okay.
So currently it's not. So currently they are catering into typical auto sector. But going ahead, once they get quicker clearances, and then their global portfolio will they will bring in, and that's how they will have a larger penetration in terms of their product delivery, in terms of consumer facing. So I think now Bosch will shift from an auto player to a consumer facing player, giving range of products to the Indian consumer. I think that's the biggest story.
Okay, what about valuation? Vinit had a concern on valuation.
So currently, so trailing 44 times PE multiple. But yes, there can be some amount of bickering about slight higher valuation. So 10-year average is low is at 30, and currently high is at around 50. So it's around trading at around 44. Yes, there can be, when market is correcting, if Bosch is available at lower valuation, I think better. But I think this is a long-term compounding story. See the amount of cash flow they are generating year after year. So I think it's a robust business model. So forget about what market will do, in terms of valuation. But business point of view, I think it's worth owning for next 5 years.
Okay, so it's more of a portfolio stock which Umesh has been speaking about in terms of Bosch. He believes that even though market considers it expensive, it's something that you should own, and the entry into retail will probably be the big trigger. For Vinit, the concern remains valuation, and it's a clear avoid for Vinit at this point of time. The next stock that we talk about is Ujjivan. Now the numbers were decent, after years and years of, after quarters and quarters of reporting weak set of numbers, they've come out with a decent set of numbers. Last quarter only they had cleaned up their book, so this quarter does reflect a much cleaner book this time around. The second quarter was a loss of 12 crores. This time they have reported a profit of 29 crores. So what should one do with Ujjivan and the space in which the small banking space is there? We'll ask our guest. Vinit, are you bullish on Ujjivan?
Ujjivan is a good story, but I think there is too much of uncertainty going out as they chart their course. Typically, young banks are expected to grow at 40-50%. Their growth rate is around 25%. They've got an NPA of about GNPA is about 4.5%. Although they provided a lot, but and they're moving away from the microfinance portfolio. So for me, it's a long drawn challenge how they will muster the growth. And at 2 times book, I think there are much better plays available in the market.
Okay.
Okay. So I'd look at ICICI Bank 1.6 times established franchise. Clearly the NPAs have peaked. You have got multiple growth drivers in terms of subsidiaries. Look at South Indian Bank growing at 18%. Okay, established franchise available at just around a little under book. So I think these two stories compared to Ujjivan, established franchise, makes a lot of sense than being with Ujjivan. Okay,
so that's the view that's coming in on Ujjivan. Would you share a similar view on Ujjivan, Umesh?
So I think in last 2 years, business dynamics have changed for microfinance sectors. Yes, in the past they were able to capture growth because of their reach, but now because of technology, even the larger banks, private sector banks, and to some extent PSU banks will try and capture the pie that earlier microfinance companies were into. Second, the challenge for Ujjivan is low cost CASA funds, which currently is very hard for them, because the biggest surviving thing for any finance or any lender has to be low cost funding, which they are finding it difficult. And that's the reason why maybe even Bharat Financial, so profitable, has been merged with IndusInd Bank. So somewhere down the line, business dynamics have changed, and you see the growth. Current quarter growth, 7% growth in their loan book, and private sector banks have posted around 20-22% growth. So to that extent, the growth potentials have decelerated. Yes, they are growing obviously, but where's the potential here? So slowly and steadily, I think their pie will be taken away by private sector banks, and now once the PSU banks are recapitalized, even they will also try and capture, because digital platform, I think everyone are into a digital platform. So reaching out all those guys who are paying more interest, right? So a customer of Ujjivan is paying more interest than if he shifts to a private sector bank or a PSU bank. So why will someone pay more when a low cost loan is available? So I think all those factors will make hard for microfinance companies to really sustain that growth momentum, and that's why I think so this will be a just sort of maybe a dying industry going ahead. Otherwise, they will have to merge.
Yeah, so that's what I was getting at. So can Ujjivan in its own survive, or will we see something like what happened with Bharat Financial? Ultimately, they had to merge into an IndusInd bank. So is that something that you would see that could happen to Ujjivan?
Seems difficult, you know. They will really have to. The winning horse is what low cost funds, and that is difficult unless they are merged or they get a banking license. And I believe, if I'm not wrong, they don't. But sooner or later, even if they assuming that they have banking license, it's very too late, you know, in terms of now reaching out, now creating a franchisee and creating a model to attract loans. So all those, plus government's intention to have larger financial inclusion. Bandhan Bank, there are so many government entities. Government will force low cost credit to the larger masses, and that's the intention of the government. So all these guys will have really difficulty penetrating and sustaining the growth. So that's the difficulty that we see for microfinance institutions.
Okay, so that's the view that's coming in on Ujjivan at this time of time. Before we move on, here's a quick recap of the guest views on the stocks that we've covered till now. Okay, the market seems to be correcting very, very fast, and you know, everyone was hoping for a big correction that would come in when the markets were trading at record highs. Now, since the correction has come in, we're asking our guest what are the good stocks that they should look at for an accumulation at this point of time. And Vinit, you selected a stock called JK Agri Genetics. I believe it's only a BSE listed company. What does this do?
Yeah, so it's in the seeds business.
Okay.
From the Singhania stables.
Okay.
A very good company. They got a very good branded portfolio of plasma gene bank. They also have got 16,000 distributor network. And if my memory serves me right, there was one company with only plasma gene bank, which was picked up for about 500 crores.
What's a plasma gene bank?
So they have these IP, which is goes into getting the modified seeds.
Okay.
Right. So just a private player was picked up for 500 crores. Here you have a company with not only an established distribution network, but a good bank of plasma available at around 500 crores. And all the other players which are there, like you talk of Nath Seeds or you talk of Kaveri. Okay, what separates this company from these other players is that they've also got into the business of vegetable seeds. Okay, so that's a very big market. It's a high margin market. And one thing which people are not aware of is that they're in Ethiopia since 2011 testing their genetically modified seed. So it takes 4 to 5 years for other players to go and set it up. Okay, so they are 4 to 5 years ahead of their Indian peers. So I think, and the Ethiopian market is an opportunity as big as the size of this company. So there are multiple triggers. So one is you have the existing business doing well, you have vegetable seeds come in, and you have the African opportunity coming through. So this stock can really do well, and it's a very small tiny equity. 3.45 crores is the equity. 70+% is ownership of the management.
Okay.
And shares are very thinly traded.
Okay.
So while it's a while it can have wild swings, because that is the opportunity cost of buying stock, I think it's a very interesting play that people should look at.
Okay, a couple of follow-up questions. What's the debt situation? What's the cash situation? And how are the financials of the company, if you are aware of it?
Yeah, so the financials are pretty attractive, as I've told you. 500 crores for the size of the business. There is an event which is happening. They won an arbitration with Rajasthan government, which will make them debt-free.
Okay.
Right? So you'll have long-term debt going away, only working capital debt remaining. And I think it's a stock, it's a hidden gem.
Okay, so that's what. And is it a profit-making company?
Yes, it's been a profitable always.
And what is the revenue CAGR, if you're aware?
I think there will be a hockey stick effect in this stock as we go ahead. Over the next 3-4 years, you will see exponential growth come in.
Okay, so JK Agri is the stock that Vinit is spoken about, and the disclaimer that he says it's a very thinly traded stock. It's only available on BSE, so please do your due diligence on this. But he says that it probably can have a hockey stick effect if things work the right way. And Umesh, what's your long-term pick? What's your view on the market as such?
So what we think is, if I make a dogmatic statement that the entire world has entered into a bear market, so people are surprised, but I think that's how tops are made. So there are a few things that I would like to share. The typical tops that we had seen in 2007 December or 2008 early in India and in US are the same setups that we are seeing right now, not only in US but even in India. So for example, in last month, January, the cash market volume in India in Nifty was double the entire previous year's average. Correct? So we saw that this is the signs of euphoria, wherein more number of people jump in, those who are left out, the herd mentality really trickles in. Second, even in US, the US average volume in the month of January was double the previous 3 to 4 years. Okay. In fact, that was a record. So that same thing happened in US in 2007, October, November, December, when US market topped out. So same frenzy, same euphoria we are seeing in US market. And when we study tops of last 100 years in US, 30 years of Asian market and of India, whenever a bear market begins, right, the fall is sharper than any other fall. So current fall in US and in India is the sharpest in terms of percentage, in terms of velocity. So where have all the bulls gone? I think all the bulls are already bought in. All the funds, all the liquidity has been sucked into the system. You see how State Bank of India has increased interest rate, and interest rate is the biggest enemy of bull market. One increase of interest rate by around 1.5%, and State Bank of India doing it, I think that's massive. So all the liquidity has been sucked out. The bond market fall in US is the biggest trigger that whenever in 2000 around 1978 or something like that, I don't remember the precise time, wherein the bond market had started a sell-off and the equity market too started to correct, and that correction went into eventually into a bear market. So I think we have made a top for the year. Number one, going ahead next 1-2 months, then people will start saying election. Oh my God, there is election. Let us see which government comes in. So that's how we see that the current year, investors should really stay on the sideline. Do not think that this bounce will be bought in, and again we will see new high. No, keep patience. We had a solid bull market of 1.5 years. Let market correct, let the excess froth get corrected, because eventually what we were doing a 10-year average 35% premium to our 10-year average. So mean reversion concept that we think will really play hard, and market will have a decent correction. So I think it's better wait and watch, and at times take profits also, because even the good quality show, you see the numbers this quarter, even after numbers I think stocks have really fallen hard, because ultimately people will want to raise cash. If market started to fall, all the liquidity will get overnight sublime, and people will start thinking I want cash rather than putting in cash.
Okay, so that's the view, a cautious view coming in. But before we thank our guest, PNB numbers are out. Extremely weak set of numbers, at least on the profit front. 230 crores versus our estimate of 556 crores. So that's extremely weak. We'll need to see what the NII is. The counter is anyway reacting negatively. So that's what's happening with PNB. We'll try to get our analyst in terms of what's happening. Any view on PNB in terms of, if you're seeing just the numbers? If any one of you has any view on PNB, the numbers have just come out. So the NPA, the asset quality is improved slightly, 12.1%. No, by no means a small GNPA number, but it's managed to come off. The profit is at 230 crores.
So my opinion is that it's still a while before the bank recap will just take care of the existing woes. It's not going to add growth capital. So I think I have a counter view to the market that the PSU banks will move up. I think they'll be still laggards, just being volatile and sideways for some more time.
Okay, so that's the view that's on PNB, GNP at 12.1%. The counter has managed to inch up slightly. It hasn't moved significantly. They managed to improve the asset quality. I think that is what the market might like. Profit, probably there could be some provision. Shraddha Babla joins us. Shraddha, okay, so Shraddha is taking some time to mic up, but that's the general trend that we are getting in on PNB. The NII number was just out. I seem to have missed it, but I believe it was lower than what we had anticipated. Our estimate was 4,100 crores. I seem to have missed the NII number. If it comes out, we'll come to know what the NII number is. So we're just waiting. NII is at 39.18. Okay, so it's slightly below what we were anticipating, so not the best of the numbers that are coming in from PNB. So we'll take PNB numbers on the other side of the break, but thank you Vinit so much, thank you Umesh so much for joining me on the show. With that, it's a wrap on Hot Money. But before we move on, Jonathan Garner of Morgan Stanley believes that the recent market correction is not a 1 or 2 day phenomenon, but a more long-lasting one. Hear out a slice of his conversation that he had with Bloomberg earlier in the day.
I think there's a lot of loose talk around like a healthy correction. I think you have to be very specific about which markets, and you need to look at how valuations adjust. So we're actually just moving below our base case target for Japan today. That's adjusting more quickly. Topics. For Hong Kong, yesterday we had the very strong southbound flows, which actually cushioned the adjustment, but it's selling off heavily now. So again, just starting to move below our base case target. But I suspect we need to see a correction that is meaningful enough to establish something like 5 to 10% upside to base, particularly when you bear in mind the way that some of the quantitative strategies, systematic strategies are starting to unwind, and just how extreme the investor euphoria was going into all of this. So I doubt very much that this is just going to be a 1 or 2 day phenomenon. I suspect it's going to be more long lasting.
How deep will this correction be? And there are views out there that it is just a correction. This sell-off will be short-lived. Are you of that view? I mean, you said that perhaps not the next few days, but how deep will it be?
Well, I touched on the idea that Japan is moving faster through this correction than elsewhere, but the deeper problem for Asia is we're a tech-heavy region, and we downgraded the semis and tech hardware space last November, and last night, just before the US Open, and our US strategy team did something similar. We downgraded tech overall, including the internet names. So that's very important for us here in Asia, and it's really there where the valuations have been at their most extreme and where we're starting to see earnings revisions moving south. And again, that speaks to the idea this is going to be quite a long-lasting correction. So I think where's defensive, actually you were covering the markets in Singapore. I think ASEAN, Singapore and Thailand, that's not over-owned, it's not tech-heavy, it actually speaks more to the upstream energy sectors. I think those markets can be somewhat defensive in this sell-off, and we think North Asia is where the price action will be most severe.
बढ़ते समय के साथ बढ़